Yo. Hello. Hello, hello. Hello, everybody. How is everyone doing? Let me just make sure we're all ready to go. Right, you can see all this now. Hello, Asif, Emma, Charlie, Dave, Maiden, Donald, Sean, Joven. Hello, everybody. Hey, Dr. Sankalp. Hello, everybody. How are we all doing? How is everyone's Saturday? How's everyone's weekend going so far? Give us a couple of minutes and we'll get right into this. This, right, before we get started, this is going to build on everything you need to know, right? Or everything you already know. It's going to build on everything, right? I know 99% of people know what a fair value gap is, know what liquidity is, right? There's obviously a small percentage of beginners that don't know what that is, okay? But the majority of the people watching this video, I'm pretty sure, know exactly what a fair value gap looks like, okay? Hello, Virgil, Pietro, Gerardo. Is this going to be posted later on YouTube just because I'm at work, so can't take notes right now? Yes, it should be. It should be. But, yeah, we'll give it a sec. Just make sure, everyone who wants to be here is here. Once it hits 25 we will get started. Hello, Terry. How's it going? Right, this is going to show you how one of my students has gotten over $1.4 million in funding, right? And I know that's absolutely crazy. One person who I work with directly, right, has gotten over $1.4 million in funding, right, in like 3 to 4 months. All right. I've been working with them since November, all right, and it's March now. We had a month off from December to January for Christmas when I had my break from trading, right? 1.4 million. I'm going to show you that, right? I'm going to show you the proof of that. Once I've proven that that's actually true, right? Then we're going to get into the knowledge, okay? I'm going to show you exactly how to build on stuff that you already know. The highest probability liquidity, the highest probability fair value gaps, ERL and IRL, the highest probability way to use that, all the different bits and pieces with your entry that you may not know already, right? We're going to get started with that. So like up the stream if you haven't already, right? We're going to get started in a minute. When it's 25 we're going to get started, right? Make sure everyone who wants to be here is here. I'm going to show you exactly how he got 1.1. Well, I'm going to show you that he did. Prove that he did get $1.4 million in funding, right? Then I'm going to prove how he did it, right? Show you how he did it. What systems, strategies I taught him for him to use to get to that level in such a short space of time, okay? FTMO account, the right way to go. Now, from my point of view, because most of the firms are dodgy, if you want reliability, yes. If you want a prop firm you can rely on that will actually pay you, what you're supposed to be paid as long as you follow the rules, and that won't just disappear one day, definitely go with them. Psychology is the thing I struggle with, working on it every day. Nice to hear. Hey, Levita, how's it going? Right. Hey, Richard. So, like up the stream, guys. We're going to get started in just a sec. As I said, this is going to teach you the exact strategy that got just one of my students $1.4 million in funding. This is an accumulation of all different people. This is one person in 3 to 4 months has gotten $1.4 million in funding, right? We're going to get right into that. And if you watch the daily trading streams, you'll see the progression, like, when he passed his first 25 or something like that. He passed his first 50k a good few months ago. But we'll break that down in just a sec. As I said, I'm going to show you stuff you already, like how to build on stuff that you probably already know. I'm going to show you how to build on the fair value gaps, build on the liquidity, right? Show you exactly how to trade like me. So, are we all ready? Let's get started. So, this is going to be, you know, an engaging stream. I'm going to be asking you questions, right? So, be prepared to answer them in the chat, right? Whatever you think the answer is. So, be prepared to do that. Obviously, get your notepad, get your pens, ready to make some notes, because why wouldn't you, right? So do that, okay? Get your notepads, get your pens, and let's get right into it. So first things first, obviously you've seen the title, you've seen this. The strategy that got one of my students over $1.4 million in funding, all right? Let me prove that first. So this is the first thing, right? I just want to show you his consent, right? One of my students secured $1.4 million in funding, and today I'm going to show you the exact system that he used to get there. First, I just want you to look at this screenshot right here, right? These are all the different accounts that he's passed, the date, all of that stuff, right? So have a look at that. Okay, and this is him obviously saying, you know, Josh, you can publish these results if you like. In total, I have won $1.4 million in funding based on your guidance and tutorial. That's a private message that he sent to me, right? That was literally a couple hours ago. Right. Now, these are the proof. This is the proof. This is proof that he's a real person who actually paid me, right? You know? And then this, all here, is proof of his certificates, right? You can pause the video or watch it back, whatever. 250, 300, 300, right? 100, 50, 50, 50, right? If you look here, there are a couple missing. I don't have all of them. Because, honestly, it's a good issue to have. There's so many, I don't have all of them. But even if you add just these up, right? This is what, 600k, 850, 900, a million, 1.1. So we're missing a 300k there. But even if this was off, which it's not, 1.1 mil is still a lot, but it's 1.4 to be exact. You can see it here, right? 1.4 million. So there's the proof, you know, proof that he said I could do this, proof that he actually got the funded accounts, and proof that that actual person exists and paid me, right? Okay. So now that that's out the way, now that I've proven to you what I'm saying is true, right? This strategy got him $1.4 million in funding. Let's get right into actually what the strategy is, okay? So, as I said at the start of this stream, I know that 99% of the people watching this video already know what a fair value gap is, already know what liquidity is, okay? They already know that. You already know that probably, you know what daily bias, AMD, all those things, you probably know what they are. You might use more tools, you might use less tools, right? You might not use any of them, and you're wondering why you're not seeing success. In this video, this should solve this entire stream. If you watch this entire thing from start to finish, this will solve your problem, okay? Because I know, from my perspective, I've accumulated all these questions that people have been asking me, the main issues, the main struggles, and I've got all the answers right here, okay? All of the answers. So first, we're going to build on, like, all the concepts, you know, the great stuff like liquidity, fair value gaps, all that stuff. We're going to build on these concepts that you already know the basics of, right? Then we're going to move slowly towards the psychology part, the psychology aspect, and then we're going to leave it there, okay? So, if you're ready to get started, like the video. We're going to jump right into it in just a second. Okay, so, now that you've seen the proof, right? And people in the course, people who actually have access to the course, they know this person exists because he speaks a little bit as well in the Discord, right? So, first things first, the illusion of knowledge, right? Now, most people think, and I definitely thought this at the start, the more that you know, the more tools that you know, the more profitable you'll be. Or the solution to not being profitable is just learning more tools, right? If you're not profitable, you just don't know this magical tool yet, or you don't know what pitchforks are, right? That was one of the main things that stuck out to me. I remember learning what pitchforks were, trying to use them. You don't need them. The answer to unprofitability isn't more knowledge. It isn't really more tools. Most of the time, it's intuition. You can have the most systematic strategy ever, right? Where it's literally just when A crosses B, take a trade with MAs, right? But you've still got to have that intuition, all right? You've still got to have that intuition, right? So the illusion of knowledge, that's what I'm talking about here. The most traders lose using tools that they already know. The solution isn't more tools most of the time. You need better execution. That's it. Intuition and execution. Once you have a clear strategy, right? Once you see, like, for example, this works with Johnny, so it will work with you, right? That's it. If it doesn't, the only issue is you either don't know all the tools he's using, which you probably do because it's all here for free, right? Or you don't know the execution, or you haven't got the level of execution that he has got to, right? So that's all you need to do. You don't need to learn these magical tools. Just focus on a set of tools, right? Like 3 or 4, right? And just learn to execute them properly. Okay, just before we get on with that, you know, this is very, very, very important. More tools, more knowledge doesn't necessarily equal more success in trading. Okay. I verify that he exists, right? Melvin verifying he exists, right? Now, liquidity. As you can see at the top of the screen, there are chart examples for this. This isn't just going to be a slideshow. We're going to look at this. We're going to read some stuff off this piece of paper, right? Or this screen, right? Yeah. Then we're going to go onto the charts. We're going to walk through the examples. And there's also a little freebie at the end, right? A little trading plan system for you to use to go ahead and use this properly, right? So, liquidity reframed. That's the title of this slide. Liquidity is a decision tool, right? You either use it to define your entry, your stop loss, or your take profit. Well, you can use all 3, but it's got to be at least one of those things, right? You probably know what it is already. You already know that it's buy-side liquidity, highs and lows, all that shit, right? But I'm not going to show you how to draw a line. I'm going to show you what lines to look at, what lines to prioritize once you've already drawn them. You should already know how to draw the lines, right? You should already know what liquidity is. My job here today, while you're watching, is for me to teach you how to prioritize each line and, you know, what lines to actually listen to and what ones to ignore, okay? So, first, let's jump straight onto this chart right here, okay? And as I said at the start of this stream, this is going to be quite an engaging thing. So what I want you to do, if you don't know, that's fine. Say you don't know or just have a guess, right? You can see that there's tons of liquidity over here, right? You know, there's liquidity at this high, you know. We can draw it all out if we really wanted, but mainly this high and this high here, right? Yeah. You see all that. And this high, you know, this one here as well. Right, there's liquidity at all these highs, right? Can someone answer in the chat for me, right? Why did the trend completely reverse after taking this high rather than after taking this high or this high or this high, right? Why did the trend reverse after taking out this high? Can someone answer for that in the chat for me? Drop your answers in the chat, guys. Tell me why we took this high and then the trend reversed. Why didn't we take this high and reverse? Why didn't we take this one? What's the difference between this high and this high? Why did we reverse at this high right here? Answer that in the chat for me. Get some comments in. Tell me exactly why we reversed here. I'll give you a second just to get a few answers in. Right, okay. Seeing a few mixed answers here, but there's a main occurrence, right? Let's see if that's it. Is that everyone? Looks like that's everyone, right? So, why did we reverse here? People said high time frame liquidity. People said because price seeks better price. Took high of previous structure. From ERL back to IRL. It's kind of all of these things. Giovanni said it's from ARL back to IRL, right? That's kind of correct. You're half there, right? You're half there. But what the majority of people have said here, someone said orders filled, stop losses triggered. That is correct, right? Again, that's what every single form of liquidity is. This liquidity here, the reason it's liquidity is because there's stop losses above it. There's orders here, they're getting filled, right? Same here, and same here, and same here. But why did the trend reverse after taking out this liquidity? Why did the trend reverse here? Why did it not reverse down here, or here, or here? Why did it reverse over here, right? The reason for that, and the majority of people got this right, actually, it's because it's higher time frame liquidity, right? That's it. So we didn't reverse here. We obviously we had a retracement, right? Let me use this circle. We had a retracement here. You can see we took this high out, right, and then retraced down. That's fine. But we didn't completely reverse like we did over here. And the reason for that is because it's not higher time frame liquidity. Now, to some extent, it is. Like, don't get me wrong. This is probably a high on the 1 hour, right? Maybe not these, but this definitely is a higher time frame on the one. I mean, this is liquidity on the 1 hour, right? So if this is liquidity on the 1 hour, this is higher time frame. This is higher time frame as well, right? But why did the trend reverse here, right? Why didn't it reverse this liquidity, or this one over here? Why did it reverse here? Not here or here, right? The reason for that, and the majority of people got this right, as I said, it's because it's higher time frame liquidity. And that's half there, right? It's half there. It's not exactly true. Just because it's higher time frame doesn't mean that it's going to reverse, right? That's not right at all. There's two things here. And one person got half and one person got the other half, right? So Giovanni, you said ARL to IRL, right? And other people said higher time frame liquidity, right? It's both of those things. So it's higher time frame liquidity, but we also are looking at higher time frame ARL to IRL, right? And if you don't know what ARL and IRL is, you've clearly been, I don't know, living under a rock or something, because I go on about this like every stream, every video. And this is the 4th lecture, by the way, guys. This is actually like kind of like a series, if you didn't realize. So we're actually building on lecture 3, right? And there's a whole playlist on my YouTube if you want to watch all of them. Trump spoke. So I said Trump spoke. Right. Okay, so it's this. It's higher time frame liquidity. It's higher time frame ARL and IRL, right? Because we already know ARL and IRL is liquidity. External range liquidity, internal range liquidity. So it's higher time frame external range liquidity to higher time frame internal range liquidity, right? So this is obviously higher time frame, and this is just the 1 hour. This is the daily, right? If we go up to the 4 hour, you know, it's a 4 hour high. Daily high as well. But if we go back to the 4 hour, right, something pretty cool here happens, right? First, we're just going to focus on this. This is the reason the trend reversed, is because it's a significant 4 hour high, right? It's not just a 4 hour high, right? This is a 4 hour high right here. This is a 4 hour high right here as well. This is a significant one, right? It's a significant 4 hour high. And the reason it's significant is because it's the highest high, right? It's it's higher than all of these. This is the last push. This is the retracement. And we're pushing back up, and we took out the previous high. So we would retrace here. Now, obviously, as you can tell, it's not a complete trend reversal on the 4 hour. It's a retracement on the 4 hour. So there's also that correlation. But what I want you to take away from this is the highest probability reversal from a liquidity point will come from a higher time frame liquidity, right? So the highest probability liquidity point, the highest probability of a reversal at a liquidity point comes from a higher time frame liquidity, right? Liquidity zone, whatever you want to call it, right? So we go back to this. You see in there how we had ARL and IRL. If you already know what that concept is, you can see we already had that, right? You can see we already moved up, retraced, and so on, right? But we took out a significant 4 hour high and then completely reversed the trend. Now that obviously trend reversal, that trend reversal is obviously just a retracement on the 4 hour. But what I want you to focus on, right? The highest probability liquidity will come from higher time frame liquidity zones, right? And if we look at the actual entry model, for the people who know the entry model here, right? If we go back down to the 15, you can see we almost had a perfect entry point. We didn't get an IFVG, but we had an AMD, right? We had an accumulation right here, a manipulation to the upside, and then a distribution to the downside, right? Taking out all the other lows. This is a complete trend reversal for the 15 minute, right? But it's just a retracement on the 4 hour. So when you're trading any strategy really that involves liquidity, if you're pairing it with a higher time frame liquidity zone, the chance of winning that trade increases dramatically, right? As long as you're obviously trading in the right direction. So liquidity, right? The liquidity zones you want to be trading are the higher time frame liquidity zones. That's what I want you to write down, okay? Write that down. You only really want to be trading the higher time frame liquidity zones. When price takes this out, it will have a complete trend reversal. And if you compare this with AMD, right? And this isn't even like a cherry pick. This is literally just the most recent one, right? But we had a clear AMD. You can see it right here. Clear AMD. But this was obviously through the night, so we couldn't have caught this. But that's the type of trade you want to be you want to be catching, right? So focus on the higher time frame liquidity. Write that down if you haven't already. Write that down. Focus on the higher time frame liquidity. Okay? And this will also correlate with your bias, but for now, the higher time frame liquidity points are the highest probability. So higher time frame. You can even write this down. Right? Higher time frame liquidity equals higher probability trade. And don't get me wrong, right? We do reverse all these other highs that you can see along the way. You know, we take out this high, retrace, take out this high, retrace, take out this high, retrace, take out these highs and that high over here, right? Then retrace and just so on, right? Yeah, but the higher time frame liquidity is higher time frame probability, right? So you could go from the 15, if for example, right, there could just be like a 5 minute, a 15 and a 1 hour. That will be higher probability than just like a 5 minute high, right? If you get a 5 minute, a 15, a 1 hour, a 4 hour and a daily and a weekly high, that's going to be higher probability than just the 5 minute. So the more time frames you can stack on the liquidity zone, right? The more time frames you can stack on the liquidity zone, the higher the probability the reversal will be, the higher probability the trade will be, the stronger the reversal, right? Because we've got to retrace on those higher time frames, which obviously translates to a trend reversal on the lower time frames, right? So that's step one, okay? That's liquidity. As I said, I'm not going to be showing you how to draw these lines. I'm not going to be showing you what liquidity is and stuff like that, right? I'm showing you the higher time frame stuff, like, well, not just the higher time frame, but the high probability stuff, building on this kind of thing, right? Building on stuff that you already know, okay? Like Netflix. Right. So, yeah. Right, everyone got that down? We're going to move on to the next thing now. So, fair value gaps used correctly. Let me get my pen out. Right. So, fair value gaps. Fair value gaps don't create setups, they confirm them, right? They confirm your setups already. You don't just take an entry from a fair value gap, they confirm the entry. So with the IFVG that you look for, right? You see the accumulation, you see the manipulation, you see the high time frame liquidity taken out, right? That creates the setup. The IFVG that you get at the end of that, just before you enter the trade, that confirms the entry, right? It doesn't create the setup, it confirms the entry. It creates the entry, confirms the trade, right? Focus on valid fair value gaps. Ones that form after a sweep, ones that are in direction of the bias, and ones that are actually in the proper timing, right? And I'm going to show you more on this literally today as well. You can see there's a lot of slides at the bottom, but I'm going to show you the right price to trade, the right time, and the right price. Okay, we'll get onto that, But for now, all you need to worry about is the fair value gap. So what's going on? There's bits and pieces. Everyone knows what a fair value gap is, right? Not everyone knows which ones to use. Okay, so this is all the liquidity stuff we were looking at. Let's zoom in a bit. Now you can see there's a couple fair value gaps here, right? But what I want you to focus on, here you can see AMD as well, but if you just focus on this, right? There's two fair value gaps here, right? And this is, get ready to give me an answer here, guys. There's two fair value gaps right here. Why did we respect this one and continue down? Why didn't we come back to this one? So I want you to answer this question. Why didn't we come back to that top fair value gap that you can see? Why didn't we come back to that, right? We swept the low, you know, we swept the lows, all that stuff, right? Tell me why we didn't come back to this fair value gap. Tell me why. Let's get some answers in the chat, guys. Does anyone know why we didn't come to this high? I'll give you just a sec to answer that. Right, a few answers here. Let's get some more in. Right. Two people have got this right, I think. From what I can see, two people have got this right. Three people have got this right. Okay. There's a few guesses here. You know, there's a few good guesses. But I've only seen 3 people get it right. Okay. So, I'm going to answer it now. I'm going to show you exactly why. So, I teach this in the course. Everyone should know this who's in the course, right? When you see back-to-back fair value gaps, right? What do? Go up a time frame. Right? So, we're on the 15. This should all be clicking right now. We're on the 15, right? Oh shit, there's 2 fair value gaps here. What the fuck do we do? Are we going to respect this one? Are we going to respect this one? Oh shit, I don't know. Delete that. Go up to the 30 minute, right? And draw a fair value gap because there's usually just one kind of overlapping both of those things. You can see we tap into the premium zone of that fair value gap and then reverse. That's it. That is it. 3 people got that right, guys. So when you see back-to-back fair value gaps form like that, there is usually just one on a higher time frame. You want to use that one, okay? We did sweep the low. A few people said ERL to IRL, which is kind of right. But the reason we just respected one of them and not both of them is because it's just one on a higher time frame. Okay. That's the answer. The reason we didn't come back up to this one, okay, so the reason we didn't come back up to this one is because this didn't align with the one that we formed, the only one that we formed on the 30-minute time frame, the higher time frame. So we've seen two back-to-back, we go up a time frame till there's just one, and we look for price to either inverse or respect that one, right? Because if we'd have done the opposite and inversed this one right here and closed above here, right? If we closed above here, we would not take buys. The reason we wouldn't take buys is because we could end up respecting this one. But all we would have to do, right, is wait for price on the 30-minute to close above here. If we closed above that on the 30-minute, we could have took a buy. We respected this one. The reason we didn't tap into the other one is because there was just one on the higher time frame, right? Only 3 people got that right. So I think this is a big learning curve for a lot of people, right? So let that sit with you. Right? So that's just one of the things that I'm showing you, right, about fair value gaps. So you should have a list, right? You should have like it should be like this. This is what you should look like on your notepad. Advanced fair value gap, extended, right? Extended guide or something like that. Fair value gaps, whatever the fuck you want to put, right? Point number 1, when you see 2 back-to-back, or don't even put 2. When you see back-to-back, right? When you see back-to-back fair value gaps, right? Go up a time frame until there is just one. Use that one. Whether it's for a continuation or FVG, right? That should be point number 1, okay? That's what I want you to write down for point number 1 in your little notepad, right? Now, you see, obviously, there's multiple fair value gaps drawn out here. We can ignore this. But this is where it gets a little bit cool, right? See how we took, right? See how we took this high right here with that liquidity, the higher time frame liquidity point, yeah? See how we took that? Then we retraced back to the higher time frame fair value gap. So this is just literally this on the 4 hour. This is literally just a retracement, right? We take the high, retrace. Okay, we go down to the 15. It's a complete trend reversal, like I shown you over there. Okay, but this is where the bias would then be bullish. But I just wanted to show you this as well, right? The bias would now be bullish. So the reason we pushed down all the way to here, and I could have spotted this, and I even said this in my market outlooks. If you don't know, I do daily free market outlooks, right? I even said this in that, literally in that video. Every single day last week I was right with the bias, by the way, right? But on Thursday, right, for Friday's bias, I said to you, we've took out daily highs, we took out 4 hour highs, we need to come back to a 4 hour fair value gap, right? That is why we did not retrace and completely have a trend reversal here. And a few people took trades off of this. And this was incorrect. The reason it was incorrect is because we needed to come back to that 4 hour fair value gap, right? We needed to come back to the discount zone, right, of that fair value gap. So point number 2. Look for price to come into the premium / zone of the fair value gap itself, right? And higher time frame fair value gaps can dictate the trend or the bias, the same way that higher time frame liquidity can dictate the bias as well, right? Yeah. So Another reason we had a complete trend reversal is because we took the high, and you know, obviously you'd look for price to continue up to here eventually, but we even tapped into this daily fair value gap and then reversed, right? But what I want you to focus on there is this main point here, right? When you see back-to-back fair value gaps, go up a time frame until there's just one. Use that one, whether it's for a continuation or FVG. And as I said at the start of this lecture, guys, this is only for people who are actually deadly serious about their trading, right? They actually know stuff about trading. I've done 4 live lectures so far. This is the 4th one, right? The first one I shown you how to draw a fancy little box and call it a fair value gap, right? The second one I shown you some other stuff, right? The third one I shown you how to identify the highest probability fair value gaps. But now I've accumulated questions off of people, got people's feedback, seen what their biggest struggles are, and now I'm showing you that issue. So if you didn't know this, write this down. I demonstrate this example every single day in my live streams, okay? So, you know, this is one of the things you want to be focused on. When you see back-to-back fair value gaps like that form, go up a time frame until there's just one and use that one. Okay? So now that that's fair value gaps out the way, we can move on to bias. Why your bias flips, okay? Sometimes in the middle of the day, don't get me wrong, your bias can actually change, but I'm going to show you how it can change. If your bias aligns with the trend 24/7, it isn't a strong bias at all, right? If you're focusing on the trend and you're going, oh, we're in an uptrend now, so I'm going to only take buys, right? You would have missed out here. Missed out here. All these red days that we had, you would have missed out on trades, okay? I traded those days. You would have either missed out on trades or lost those trades, right? Probably 90% sure. Yeah. And the reason for that is because you're aligning the trend with your bias. Trend and bias are not the same thing. A lot of people use their trend for the bias, right? But they are not the same, and you don't want to use them together, really, right? You can have a very strong bias if you have a bullish bias based on other things, plus there's a bullish trend. Don't get me wrong. But you don't want to look at the trend and use that for your bias, right? A lot of people say the trend is your friend, stuff like that. And some people do the opposite of the trend because they're waiting for the reversal or something like that, right? It confuses me as well. But I don't use the trend. The trend for your bias doesn't even make any sense, because if you were to trade with the trend, right? Here's some thought for you, right? If you were to trade with the trend, that would basically imply that price just does this. Yeah. That's basically what you're implying there. Ah, yes, look, we've had bullish higher highs and higher lows. So I think we're just going to continue up forever and not pause, right? Or if you're realistic, you know what I mean? If you're realistic and actually, you know, logical, right? Price should retrace. Take a high and retrace. Take a high and retrace. Okay, it's continuing up or continuing down. I do not care. I focus on the liquidity. I focus on the fair value gaps, and that is literally all you need to worry about. Don't look at the trend. It doesn't make any sense to just trade with the trend 24/7. You either, if you are looking at the trend for your bias, right? You either trade with the trend 24/7, or you don't even use your bias 24/7, right? Either one is an issue. Okay, so just stop looking at the trend for your bias. It doesn't make any sense, right? It doesn't make any sense because we're not just going to do this, and we're not just going to do this either, right? We're going to do this, and we're going to do this, right? I catch this move up, I catch this retracement down, I catch the end of that retracement, I catch the move up, and the retracement on every single move, right? We catch this, we catch this, we catch this, and this. We dissect the trend and use that for our bias, right? You want higher time frame structure, liquidity targets, and a pre-session plan, okay? I do that every single day in the course. I give you a pre-session plan, right? And the market outlooks give you the same thing basically as well. But we base it on structure, right? And proof of that, I did a market outlook every single day last week, yeah? Monday to Thursday, or Sunday to Thursday. There's 5 market outlooks, but only really 4 days in the week that you can do it, because there's no point doing a market outlook on a Friday night, right? But we got every single thing here. We caught all of this, even from last week. We caught all of this, right? We caught the retracements, we caught the continuation, we caught the retracement again, we caught the continuation again, and we caught the retracement again yesterday, right? Now, did I trade every single one of those days? No, right? But we got the bias right, and that's the main thing. If you can get the bias right, you can get the direction of the day right. All you have to do is find an entry, okay? Sometimes the market doesn't give you an entry, but this is how I know this works, right? Because I do it every single day in front of people, and they see it play out. So, how do you find your bias? How do you find your bias? If you're not using the trend, right, you don't use the trend, how do you find your bias, right? Let me show you. So, two things you should already know. Liquidity. It's very straightforward. Liquidity and fair value gaps, right? That is literally it. You don't need anything else. Okay, maybe you could I guess you could say FVGs. Technically, just still a variant of fair value gaps, right? That's all you need. And in other words, for the people who actually know what I'm talking about here, the people who have the course, they should definitely know this. It's simply just ERL and IRL, right? If you watch the last 3 live lectures that we did completely for free, you will know what that concept is, right? That's what I said. I'm not spoon feeding you these concepts. I'm not going to teach you how to draw a line and break down how this works, what this is. All you need to know is this, what it is. This is what we use for our bias, okay? Liquidity and fair value gaps. So, how does that work? Let's break it down day by day for you, all right? So, here. We were bullish for the day because we needed to come out and take highs. So this day we would have got the bias right because we would have been bullish because we were looking for price to come and take out the highs, right? We've took out those highs now, all of these highs here, right? And on the 4 hour, we've done the same thing. We took out all these highs here and even up here for the 4 hour as well, right? We took all these highs. Now we need to retrace back to a fair value gap. We don't really know where to retrace back to, so we use the 1 hour, and we know that we can retrace back to here, right? Or we can use the 2 hour, because there's multiple there. See how I already knew that, right? But, see how there's 1, 2, 3 here, right? Use the 2 hour, come back to that one. So, we would have had a bearish bias for the start of the day, right? And once we tapped into this, we would have been bullish again. But we'll see how that plays out. So we continue up, right? I guess this is the day that it would have been wrong. We take out this high on the daily, right? And the daily has no bottom wick. Okay? The 4 hour needs a retracement. The 2 hour needs a retracement. All these time frames, they need to retrace, right? So, what do? We're bearish. That's literally it. We're bearish that day, okay? Back towards this daily fair value gap that we formed right here. We wait for price to come back to this. So we're bearish. We took out the highs. We need a retracement. This is, like, if you want proof that I said this, I do daily market outlooks completely for free on my YouTube. You can see it all day by day for the past like 6 months or whatever the fuck. I don't know. Like literally every single day near enough. Some days I have off. A couple of weeks from the end of Feb, but more or less pretty consistent, right? So we took out these highs. We need to come back to this fair value gap bearish. Okay. Now, here's where people get confused. People would have seen a few things. They would have gone, we've tapped into the fair value gap, right? We've tapped into the fair value gap, so now we need to continue up. But if you remember what I said literally 10 minutes ago or something stupid like that, we need to come back to the discount zone of the bullish fair value gap, right? We need to come down to the bottom half if we're actually going to continue looking for buys, okay? So I'd still be bearish right here. There we go, right? And another little learning tip, but first things, we would have caught this move down. Second things, right? A lot of people were looking for sells from here, and a lot of people in the course actually were looking for sells here, which was strange, right? And that's why you wait for the candle close on the FVG. Okay? When you're looking for FVGs, you have to wait for the candle close. But again, that's probably basic knowledge. It's common knowledge. I think 90% of the people here probably know that, right? But we were down here, but I was still bullish. Even when we were down here, I was... The second we got here, bullish, right? Yeah. But even when we came down here, I was still bullish. And this was the trading session that I was looking for. So on my live stream, you can see it as well. I was bullish here as well, okay? You can see it all. It's all proof, right? It's all proven everywhere on YouTube, right? So, bullish, right? We push down again. So we were bullish, you know, Friday. Took out the high on the 1 hour. Had to retrace back. So we would have been kind of bearish here, I guess. Because we had to retrace back to this. Inversed it. So bearish. Took out these lows. Bearish. Now we're bullish again. The reason we're bullish is because we have not closed below this fair value gap yet. So we're still bullish. Still looking for buys. At this point, people had given up. Continued looking for sells. And lost trades, right? I was still looking for buys. Where was I targeting? Well, this liquidity right here, okay? Pushes up. Boom. You could have caught this entire move up if you just followed my bias, right? You would have lost. So you would have either, if you traded with the trend, right, and you were like, ah yes, an uptrend, let's just look for buys, you would have lost or missed out on trades right here, okay? And obviously caught this. But if you trade how I trade, and you look for the bias how I look for the bias, and for the people in the course, how the way they look for their bias, right? You look for sells towards the discount zone of the bullish fair value gap after taking liquidity. If we inverse it, continue down to the lows. Until we inverse it, look for buys. So you would have caught this entire move up, right? You'd still be bullish. There we go. So, literally, I think this is just after the candle closed, right? So literally just after the candle closed, we took the highs. So this was like middle of Asian session, getting right into Asian. We take the highs. So you wake up that morning and you would have been bearish, right? Inverse this, needs to take the lows out. So you would be bearish. Right? You caught that. It formed lows here and took those out. Now it's got a fair value gap right here. So you look for price to come back to that. Bearish unless we close above it. So the second we tapped into it here, sells here and here, caught all these sells right here, yeah? Now all you need to do, there you go, price closes above it, so it would be bullish, but it's also obviously took out the highs as well. So it's straight back to being bearish, right? And that takes us to yesterday, okay, where we would have had a complete reversal. So if you only traded up trends, you would have only caught this and this, right? Another thing, if we zoom in on this, we kind of jumped to the 4 hour there, got a bit lost. Very tiny fair value gap. Doesn't matter too much. You'd probably want to use the 4 hour for extra confirmation. You wouldn't just use this alone. It's tiny, right? Take out the high, come back to it and respect it. So we continue up. Right? It's literally simple. Literally simple. You can watch if you need proof, if you're that insecure or whatever, that you need proof that this is, I'm not lying right here, yeah? You can go back and watch it in the market outlooks. Literally, right? Every single day I got right for the past 2 weeks or whatever the fuck, right? So, that's bias. That's how you want to find a bias. And that's why your bias flips. Because you're not using it properly. If you use it properly, your bias won't flip. Your bias will change, right? If that makes sense. You won't just you won't take a sell thinking you're bearish and then lose it when we're actually bullish. You'd notice that we're actually bullish, right? You'll get the bias right. You'll change the bias at the right time. My bias can change 2 times, 3 times in the day, right? Sometimes it does that. Rarely 3 or 4, right? But most of the time it's just 1. But sometimes it can change throughout the day. If we come into a fair value gap, right? If we take a low on the 4 hour, on the daily, in the middle of the day, you can be bearish, right? That's a perfect example with that 4 hour candle that took these highs right over here. Right? Middle of the day. Boom. start of the day, I guess, right? So that's how you want to find your bias, okay? That is how you want to find your bias. Use liquidity. Use liquidity and fair value gaps, and you will succeed, right? Now, where are we? Next thing. Timing creates the edge, right? Oh. Okay, got a bit lost there. Timing creates the edge. Same setup, wrong time equals failed trade. Most people know the right time, but barely anyone knows the right price action to trade. So obviously everyone knows the right time. I think it is obviously common knowledge again. Everyone knows to trade London or New York and try and avoid Asian when you can, right? Yeah, everyone knows that. That's common knowledge. But no one really knows the right price action. Unless you've learned from me already, no one really knows the right price action. Right? So what is the right price action to trade? Let me just go to this chart. What is the right price action to trade? And this is very simple, right? It's just AMD. The answer is AMD. Let me prove it to you, right? So AMD, that's it. Accumulation, manipulation, distribution. And as I said to you, I'm not going to be spoon feeding you these concepts. I'm not going to tell you what AMD is. If you don't know, go and watch some of my other videos. This is literally for the advanced traders only, right? If you do know what it is, which you probably should if you've learned from me before, right? Great. So accumulation, manipulation, distribution. How does it work? What is it? How does it correlate with being the best price and time, right? The best time to trade, obviously London and New York. We're not even going to discuss that anymore, right? We know that it's New York, London, New York, whatever the fuck. Best price to trade, right? So, very simple principle that I want you to write down here. So get your notepad, get your pen ready, right? Very simple principle that I want you to write down. After a big move, we will consolidate. After a consolidation, we will have a big move. Right? I think I may have touched this in lecture 3. I can't really remember. But it's so simple. If you look to the left of the screen, you can literally see it like 3 times already without even looking anywhere else. Consolidation. Big move. Right? Big move down. Consolidation. Consolidation. Big move up. Right? Consolidation down. Push up. Consolidation. Push up. Consolidation. Push up. Move up. Consolidate. Move up. Move down. Consolidate. Consolidate. Move up. That's all. I don't even really need to say much else, to be fair. Like, that is it, right? It should be pretty self-explanatory what the best price action to trade is after this, but after a big move, we will consolidate. And after a consolidation, we will have a big move. It is literally as simple as that, right? And this is where the intuition comes into it, because most people don't stare at the chart all day and don't realize this. I realize it. I stared at the chart all day, right? That's the intuition. Now let's zoom out and actually show that this isn't just cherry-picked examples or whatever, right? I don't even need, like, look, it's so straightforward, right? Like, even to this extreme example on a higher time frame. Big consolidation, big move up. Consolidation. This is AMD, right? Consolidation. Even a short move down. Consolidation, big move up. Consolidation, consolidation, move up. Consolidation, move down. Here is a very rare occurrence. This is very rare, right? And this is why the best price action to trade is after a consolidation. The best PA price action to trade is after a consolidation. Just after. Just after. Not before, not during, right? After a consolidation, right? So that's why you'll see me. You'll see me, right, we'll be analyzing the charts. Let's say on one of my streams, I'll go, oh shit, we're in a consolidation. This is great. And the reason it's great that I want to see us in a consolidation when I'm analyzing the chart is because we can catch the start of the big move. What's the start of the big move? You already know, right? This kind of thing, AMD. So when you open the chart, if you see this, right? If you okay, I don't know where that went. If you see this, right, this is great because all you need to do is wait for this and then you can catch this move straight down, right? So when I see a consolidation on the chart, I'm like, boom, perfect. Now all I need to see is the manipulation. But when I open the chart and I see a big move, and you can see this in my live streams, when I open the chart, when someone asks me to analyze a pair or analyze some form of market or stock or whatever, yeah, and someone asks me to analyze a chart and I see a big move just happen, I'm like, oh fuck, no trade here, right? You can see we have a consolidation and then we have a big move. We have a consolidation, we have a big move. We have a consolidation, we have a big move. Another consolidation, a short leg down. Longer consolidation, big move up. Consolidate, move up. Consolidate, move up. Consolidate, kind of manipulating, distribute down. Consolidate, move down. Consolidate, move up. Consolidate here a tiny bit, then push up, but you can see it all over the place. I don't even need to prove that anymore, right? All you need to understand is the best price action to trade is after a consolidation, just after, not before, right? Not during, after a consolidation. So, write this down. When you see a consolidation, you should be excited, right? You should be excited. That is the best case for you, the best case scenario, because all you have to do is wait for the manipulation. Now, there's a few idiots who are probably going to think that I'm telling them to trade a consolidation, and that's not what I'm doing. So, very explicitly, do not trade a consolidation, right? But the fact you open the chart and see one means you can catch the next big move. Why does that matter? Because it's easier to catch a big move after a consolidation than to catch a big move after a big move, obviously, right? Because we're not just going to move in one. As I said at the start of this fucking stream, right? We're not just going to have a big move forever and ever, right? So make sure you got all this written down, guys. Love your course today, coach. Appreciate that, Joven. Like up the stream if you're learning something, guys. But, yeah. Okay. Write this down. Do not trade a consolidation. But the fact you open the chart and see one means you can catch the next big move, because it's easier to catch a big move after a consolidation than to catch a big move after a big move. Now, if you don't believe me, I don't give a fuck. This is just for the people who actually care about what I have to say, right? Because honestly, like, it's got to a point, right? I might as well just let the people who don't believe me learn from their mistakes. That's probably the best thing. But here I'm giving you a solution. You can choose to ignore it. You can choose to use it. Whatever you want, right? But as long as I can say that I've given you that solution. So this is the timing creates edge kind of thing, right? Now, simplicity scales. Now that we know all that kind of thing, one setup, one bias, do it right and repeat it. Let me show you some of the trades that I take. So what I'm about to show you are the trades that I've taken in front of people or discussed with people in a public or private, like chatting, you know, like in a these are trades that I've taken in a social setting, either on a live stream in front of hundreds of people or on a private Discord chat with the course members, which are like 30, 40 active members, right? So all these trades, the same setup, the same way, like I got the bias the same way, the entry's the same, and that's it, right? Let's have a look at this. So we get rid of this right now. This is the most recent trade that I took on GBP USD, right? 15-minute AMD all that shit. Like there's so you can go back and watch the stream if you want to, but very nice trade, right? Here's another one, AMD, coming to the discount zone. What you do, look for sell. So sorry, it came to the premium zone. What you do, look for sells. IFVG. The reason we entered on this IFVG, even though it took so many candles, is because we respected this one, which gave me a sign of continuation down, right? Same thing here, right? This was in December as well. Like we can even look at February. Like this trade. Easy, right? AMD plus bearish, higher time frame for value gap respected, 1 minute for IFVG for entry, bearish bias, easy as. Accumulation, manipulation, distribution, right? Same setup here, same setup here, same setup here, right? These are just some of the trades, okay? So one setup, the same tools, liquidity, IFVGs, fair value gaps, the same way of finding the bias, higher time frame ARL and IRL. If you can do it right, you can repeat it, and you'll be able to scale. It's as simple as that. That's exactly what Johnny did. Mastered one setup, mastered AMD, then mastered IFVGs, then mastered the bias, then did it right, and now he repeats it. Just like it's literally as simple as that, right? That's all you need to do. One setup, one bias, do it right and repeat it. Okay, so write that down if you haven't already. Now, process over outcome, right? This is why you got to focus on the process. And now this is a question I've been getting asked quite a lot recently, but again, the outcome is a result, right? The outcome is a result. The process is the cause of the result. So the process you follow is the cause of the outcome. The process is the cause of the outcome. The process is the cause of the outcome, right? The outcome you get is caused by your process. So if you're losing trades, if your outcome is bad, your process is bad, right? If you have a good outcome, you most likely have a good process. So we can reverse engineer this, right? And go, well, we can't focus on the outcome. We can't really change the outcome directly, but we can indirectly by focusing on the process. Now, you've probably heard loads of internet health and fitness gurus, right, telling you to focus on the process over the outcome. But it's true. It's true. If your outcome is shit, your process is shit, right? If your outcome is amazing, your process is probably amazing. You cannot control your outcome, but you can control your process. So if your process directly correlates to your outcome, but you cannot control your outcome, but you can control your process, why on earth would you try and control your outcome? Control your process. So what is your process? The outcome is a result, the process is the cause. Your process should be, right, bias, levels, setup, execution, and then review. So you find your bias, you find the levels you want to trade to, you find your setup, you execute your setup, and then you review your trade, see what you need to improve. This needs to be your process. Every single trade should follow a checklist. Every single trade, right? Every single one should follow a checklist. Okay? That's it. If you have a shit outcome, you have a shit process. You can't control your outcome, but you can control your process. Your process directly correlates to your outcome. So you can indirectly control your outcome by focusing on your process. You can be selfish as you want the money, right? You can want the money all you want. But if you focus on the process, you will get the money. If you focus on the outcome, which is the money, you will not get the outcome at all. It's literally, I don't know how to explain it. It just doesn't work like that, right? So focus on your process. This should be your process. Now, if you don't have a written down process, I've given you one right here. All you need to do is go to the link in the description. You should see a few things. You should see the fast track course, something else, the Discord, I think. And then you should also see this trading plan linked below. Now, you can't use this exact one. If you want to save this down, if you want to save this kind of trading plan down, this isn't a strategy, this is a plan for your strategy. You should already have the strategy, right? If you're looking for the plan and you need a plan, which you do if you don't have one, you want to save it down, go to File, go to Make a Copy, and then save it down, right? Make a copy. Then you have a copy you can edit for yourself, right? So just do that. But that's in the link in the description, right? link in the description for that. Go and get that straight after this stream finishes, right? But that's another thing. So now we've covered the kind of issues there, right? You know, we focus on the psychology kind of thing. So this is your free trading plan. We'll just make sure everyone obviously sees that, and then we will come back to the stream, right? But the next thing is idolizing your funded accounts. I see a lot of people struggling with this, right? So one of the things that you want to focus on is not idolizing the funded accounts, okay? So some people, and I used to do the exact same thing, will really idolize their funded accounts. They will think it's the be all or end all of their trading journey, right? Yeah. Once you get a funded, you've made it. That's what most people think. Getting that funded account, getting that 100k, 300k, 500k, if that's even a thing anymore. There's one firm that offers $1 million, right? If you get $1 million in one account, right? But stop idolizing it. It's not the be all or end all. It doesn't mean anything. Getting funded is not equal to making it, right? Just because you're funded doesn't mean you're making it. Most traders blow their first payout, right? That's the payout. They blow their first funded account. They blow their first actual funded account. Stop idolizing them. You do not need them, right? And this is like the boring shit. And this is the thing, right? This is the boring shit that most people won't focus on. Most people just want to see the next new strategy to use. They think they've got good psychology. And the thing is, right? If you think you've got good psychology, right? You just haven't really been tested yet. If you're like, oh yeah, I don't really struggle with FOMO and shit. That's just not me. It doesn't really happen to me. I don't know. It just hasn't happened yet, right? It's going to happen to you at some point. But this is the boring shit that you got to focus on. So as much as I'd want to show you technicals all day, this is some of the shit you need to understand. Stop idolizing funded accounts, right? The reason Johnny was able to scale up so much is because he doesn't idolize it. He did not idolize his trades, right? He didn't idolize any of the funded accounts that he passed, right? He didn't idolize. So don't idolize either, right? If you want to get to that level, you shouldn't see, okay, shit, I got 50k, now I'm there. You know, like, if he was doing that, it would just be shit, right? It would just be shit. So stop idolizing them. If I gave you tomorrow $1.4 million that Johnny has from using this strategy, if I gave you that today, tomorrow, you would think you've made it. You'd be so buzzing, right? You had 1.4 million to trade on. You got paid out whatever you made on that. 1% on that is like 14 grand, right? 14 grand. Literally 14 grand, right? 1% is 14 grand, right? You'd think you've made it. Stop idolizing it. Stop idolizing funded accounts. They don't mean shit. The only thing you can really idolize is making fuck tons of money in trading, looking back in a few years and going, oh shit, I've made hundreds of thousands in trading. Trading's changed my life. I've been able to buy a house completely through trading. You know, that type of shit. And that's what I'm actually up to in the moment, right? But stop idolizing it. The only thing you can really idolize is that kind of goal, the end goal. Funded accounts aren't the end goal. So change what your dream is about. You shouldn't be like buzzing about a funded account. Great, it's the next step in your journey. So fucking what? Focus on the actual outcome, right? And this is all the process, even the process completely. Just zoom out even further than the trade and just focus completely on the process, right? You don't like just focus on the next step. Shit, okay, I've got my funded account. What's the next step? Okay, let's get the first payout. Okay, I've got my first ever payout. What's the next step? Let's reinvest that back into more accounts. Okay, I've got those more accounts. What's the next step? Let's do it again. I've got more payouts. Let's do it again. Let's do it again. Focus on the process. If you focus on the outcome, right? You get your funded account. You're like, oh shit, the outcome. I've got my funded account from all this success, right? All these trades. I've got my outcome. I've got my success. I've got my funded account here. I got my certificate. When I got my first ever certificate, I printed it on my wall, right? But yeah, focus on the process. This kind of, you can zoom out further than just the trades, right? You can zoom into the trades and go, if you want to win trades, right? Focus on the process of actually taking the trades. If you want to make money trading, focus on the process of getting to that level. If you want to buy a house, focus on the process. Don't just think about the house, right? Type shit. So stop idolizing funded accounts. Focus on the process. Funded accounts are just another step in your process towards the end goal, which would be making hundreds of thousands, if not millions of dollars from trading, right? So getting funded is not equal to making it. Most traders blow their first payout. I don't know why that random fact is there, but focus on the consistency, right? Focus on the process, not the badge, right? You know, it's very idolized, glorified, whatever you want to call it, right? It's not that good. And the second you can change your mindset from thinking about this kind of funded account goal as the be all or end all and just focus on the process, you know, okay, I've got the funded account, but I haven't made 10 grand this month. Shit, what I got to do? You know what I mean? So that's what I did. That's when I shifted like that, and it wasn't a big deal to me, right? Funded accounts just became not really a big deal. At the start, they were. When I blew my first one, I was shaking. When I passed my second one, I was buzzing. Lost that one. It took me a couple goes, you know, of actually passing them. And then I realized, someone actually said this to me, and I think this was honestly like my uncle or something. Like when I was just in the car talking about it, they were like, well, why are you buzzing? It's not even the end goal. And they didn't say it like that. They weren't hating. But they were like, you know, like, you need to realize, like, the actual, it's exactly what I've just said to you. The actual outcome here is you getting loads of money from trading. You haven't got that yet. So don't let it get to you when you're getting these funded accounts just because it's so hard to get them, right? So focus on the process. Enough yapping about that. Focus on the process. If you can put as much stuff that you, like, if you can put as much as you can into a process and just kind of focus on the process of everything that you do, you'll be so much happier. Trust me, honestly, right? Now, your edge, the edge that you trade, right? Your edge is built in the boring. Consistency lives in repetition, not adrenaline. Getting adrenaline from trading is when you take a risky trade and it plays off, or you make fuck tons of money really quickly, right? Consistency lives in repetition, okay? That's what it is. All you need to do is repeat the process and you will get the desired outcome. All you need to do, there we are, literally here as well. All you need to do is detach yourself from the trades and focus on the process. Don't look at the win on an individual basis. Don't look at the loss on an individual basis. Focus on the process. As long as you're following your plan, as long as you're taking trades that fit your criteria, as long as you're taking trades based on your strategy, as long as your risk, you know, as long as you're ticking all these boxes in your process, as long as you're following the process, you have nothing else to worry about. So you don't need to worry about it at all, right? If you actually enjoy trading like you say you do, it won't be hard to focus on the process, right? If you actually enjoy it, like most people claim they do, if you actually enjoy it, you don't just want the money, you don't just want the adrenaline, it won't be hard to focus on the process. Like, I actually enjoyed trading because I like to see it as a game. I've got to beat the game. You know, harder levels, right? It goes up in levels, right? First it's the bias, then it's this, right? And it's being able to crack that code, beat that game, that gives me the joy from trading, right? So if you actually enjoy trading, it won't be hard to focus on the process at all. But if you're only here for the money, it's going to be so hard to go months, years, centuries, I don't know. If you're here just for the money, it's going to be so hard for you to go a long time without getting that money, without getting the adrenaline, without getting that result from the trading. It's going to be so hard. But if you actually enjoy it like you say that you do, it will not be hard for you to focus on the process, right? Now that's out of the way, that's more like mindset shit, right? You already know enough. You do not need more tools. You need to master the ones you already have. If you've learned from me, if you've watched all my courses, if you've paid for the course, you've learned the actual strategy itself, if you've done all that, you do not need to know more. You already know enough. You don't need to know more tools. You need to master the ones you already have. The ones you see me trading, right? Because the thing is, right, you probably trade the same tools as me. If you trade the same tools, if you trade the exact same as me, and I mean literally the exact, like not with special random retarded indicators or any other shit, right? If you're actually trading exactly like me and you're not succeeding, that's expected, because I have something you don't. I have the intuition, I have the experience. All you need to do is focus on the process. repetition, repeat the process as many times as you need to, and you will get to the desired outcome as long as you know the strategy that you're using is legit. And if one guy has gotten $1.4 million in funding with my exact strategy in 4 months, there is no doubt that this works, right? So all you need to do is learn my strategy, repeat the process, focus on the process, right? Repeat it, build up that intuition, and you will get to the goal. The solution isn't more tools. It isn't learning pitchforks. It isn't learning rays. It isn't learning Fibonacci's and all that shit, right? You don't need to learn that. You don't need to watch ICT's 2023, 2024, 2025, 2021, 2022. You don't need to watch every single one of his mentorships, right? You know a certain criteria. You know a certain strategy works. My one, right? All you need to do is master that. It's crazy to think, like, this is literally here for free, right? You don't need, like... All right. Okay. So focus on the process. You already know enough. You don't need more tools, right? Now, that's pretty much the end of the lecture, right? But what I want to say to you is I do daily market outlooks, right? I trade this exact system that you've seen live every single day. And I also do daily market outlooks every morning, every whatever, for free. Breakdowns, bias, execution, no fluff included, right? Everything. The exact bias, everything broken down day by day on my streams and on my market outlooks. So check out my YouTube channel. I do free ones there, right? You can literally see if you go to videos, it's just a list. All the similar thumbnails, right? They're getting updated soon. But all just a similar list, right? Just a list of market outlooks every single day, right? So check those out if you haven't already. But do not miss tomorrow, right? Because tomorrow we upgrade the market outlooks permanently, more in depth, more markets analyzed. I'm going to be doing a daily bias for Forex, tons of different Forex pairs, futures, gold, and crypto. Every single market there is, I'm doing a daily bias for it. So if you trade, right, and you want a clear bias every single day for free to get your feet, get you off the ground, get you running, whatever, check out my free daily market outlooks. But yeah, make sure you're watching those. And that is pretty much it. That is honestly, that's pretty much it, right? There's not much else to this lecture now. I've covered everything I wanted to cover, right? I've shown you exactly what I wanted to show you. I've built on concepts that you probably already know, and I've shown you a bit about the mindset side of things. And that was my goal with this lecture. It wasn't for me to teach you how to draw a box. It was for me to teach you actually how to apply things you already know, okay? So, obviously, gotta plug the course. If you want the full system, the strategy, the complete psychology module, the risk, the reviews on your trades, it's all inside the fast track course. It's open now. If you click the link in the description, you obviously get access to that. But obviously got to do a small plug there. Can't moan at me there. But if you want to join, the link is in the description. Teaches you exactly how to trade. We've got 5-star reviews for a reason, right? Johnny's got $1.4 million in funding for a reason. Okay. Now, recap very, very quickly. Trade the liquidity that matters. Let the time do the heavy lifting. One clean setup is enough. Execution beats knowledge on every single level, and consistency will allow you to scale. That is all you need to know. Let today be your turning point. Come back tomorrow, and if you're ready, join the course, right? That's all I've got to share now. That's it. That's everything, right? I hope you guys have enjoyed this. But yeah, thanks, Josh. This was clear. I'll be back tomorrow. Thank you, Josh. This was a good lecture today. Excited for NQ Outlooks. Thanks for this, Josh. It was really great. Appreciate it, man. Lots of value. Thank you, Sean. Right then, guys. Honestly, that is it. We're going to call it a day here. If you haven't already, just hit like, Go check out the course. Go check out an offer, something like that. Whatever. It's up to you. If you want to succeed, you know where to come. Johnny has $1.4 million in funding, right? I'm going to be doing a full in-depth YouTube video with Johnny, teaching you exactly how to trade like me. But yeah, check out the market outlooks. That's really the goal for this. I want you to check the market outlooks. Actually, if you're not using the same bias structure as me, you need to start using it because it works very well, right? Well, yeah, that's it, guys. Like up the stream if you haven't already. And if you have any questions, join the free Discord and let us know. All right, well, this is lecture 4. see how this one performs. If this does well, I'm going to go do another one as well. We're going to do lecture 5 in a few months maybe. But yeah, that's it. Happy I can help you guys, right? Focus on that process. That's the main thing I want you to take from this lecture. Focus on that process. But yeah, that's it. That went really quickly for me. But I hope you guys enjoyed. Hope you got some value. Hope you made some notes. And yeah, I'll see you all tomorrow night. If you're in the course, I'll see you for tomorrow's weekly breakdown. If you don't have the course, I'll see you for tomorrow's daily market outlook. And enjoy your weekend. Have a good weekend. Review your notes that you've made on this module, on this lecture, sorry. Not the module. I've been saying that all morning, right? I've been recording some course videos, right? But yeah, enjoy your weekend, guys. I'll see you all on Monday for the free trading stream. That is it from me. And yeah, hope you got some value. If you did, let me know. Leave a like and review your notes straight after this finishes. But thanks, guys. Happy I can help.